With Palantir's stock price up over 375% year to date, is it finally time to start thinking about selling the stock? And there's plenty of articles out there giving a number of different reasons why you should be bearish on Palantir stock. So in today's video, we will take a look at some of those bearish points as well as the bullish counter arguments against them. And if you enjoy this type of video, make sure to subscribe. We are now around 50 subscribers away from 4,000. If we can hit that by the end of this year, that would be absolutely amazing. Thank you guys so much for the continued support, and remember to drop a like down below and subscribe for more content. Before we jump into Palantir's stock, let's take a look at the YouTube portfolio. It's currently sitting at a value of $58,541.47. That's a little bit down from its all-time highs around $59,000. If we look year to date, this portfolio has increased by $23,800. That is a massive increase. However, keep in mind that this does include contributions. But even considering that, we have had a number of very strong performing positions this year. Apple has had a very great year. In total, our position is up over 400%. Microsoft has had an okay year, but the position is still up around 300%. SoFi has had an incredible year. The position is now up almost 170%. PayPal has also had a good back half of the year. It's up 45%. Visa is up 20%. Google, our newest position, up almost 15%, Alibaba up 10%, and Palantir, the company that we're going to talk about here today, our position is up over 700%. Our cost basis on all of these positions comes out to just under $6,000, $5,818.50. However, the market value of these positions is now sitting at $16,621.17. That is up 185%. I also have a couple dividend ETFs right now. SCHD and VYM. SCHD is up 12%, almost 13%, and VYM has increased by around 20% for a total return of around 16%. This actually makes up a large portion of my portfolio. However, if you've seen a few of my videos, I've talked about liquidating one of these two ETFs to start building up the cash position a little bit more, which is currently sitting just under $13,000. But in this video, we are going to be talking about Palantir stock. Clearly, I have a very small position in Palantir. I invested around $1,000. However, with the gains that we have made, that position has grown to around $7,000. That is a great return, obviously, over a number of years. Year to date, Palantir is up 375%. So you have to go back a couple years to get to when I was buying, when it was in that $7 range. And if you stick around to the very end of this video, I'm going to talk about what my plans are for this position. However, before we discuss that, let's go over this article. 5 seemingly unstoppable stocks that I'd sell right now. Before we talk about Palantir, I want to touch on the other companies on this list. They have Nvidia as one of those companies. This is a very interesting take. I think a lot of people are still very bullish on Nvidia. However, there's competition coming into this market. There's no doubt about that. You have people like Amazon as well as AMD coming in and trying to compete more fiercely with Nvidia. And that is ultimately going to erode some of their margins. However, Nvidia is trading at a relatively fair valuation. So I don't think it's black or white whether this company is going to fall or not. I think the AI market is still continuing to expand, and this competition could just eat into some of that expansion for Nvidia. So they might not grow as quickly as they have in the past. Tesla's another one they have on this list. I think this is very interesting. The company is up 86% year to date. However, most of that has came after the election. Obviously, Elon Musk has been very involved with the Trump administration, and this has boosted Tesla's stock price. I don't know if this is going to continue in 2025. I think there are some question marks about what this relationship actually looks like and how big of an impact it could potentially have for Tesla. This one is honestly probably my favorite one on this list, and that is Apple. I honestly think that Apple could have a very rough 2025 and potentially even 2026. The valuation of this company is relatively high for a company that is not really growing at the same pace that investors have come to expect. They've had a little bit of a down year, and they go through these super cycles with iPhones, iPads, MacBooks, all of that, and that's something to keep in mind. But right now, it's looking like this company is very weak and it's trading at a very high valuation. So I think there is a lot more downside with Apple than potential upside. The next one on this list is MicroStrategy. This is one I actually also believe should be sold. If you have this company and you've been able to capitalize on this 468% gain year to date, that is great. However, MicroStrategy matches Bitcoin, and I personally have just never been able to understand Bitcoin. It doesn't provide any utility in the world. It's basically just a replacement for gold. If you believe in gold and you like holding that type of asset, then yes, maybe Bitcoin makes sense for you. But for me personally, I like buying businesses that are actually producing something. And I don't really see that with Bitcoin or even with MicroStrategy. And the final company on this list is none other than Palantir Technologies. Year to date, this stock is up 380%. And over the last 2 years, it has been driven up 1200%. A lot of that has to do with the business that Palantir is in. AI has obviously capitalized very nicely over the last couple of years, but Palantir has also positioned themselves in a market that lacks some competition. Their Gotham and Foundry platforms really don't have any large players that they're competing against, and ultimately this creates a very strong moat that has driven up Palantir's valuation. And the final thing that has really helped Palantir's stock price has been a shift in their focus to profitability. This is something that 3 years ago, a lot of people had question marks around for Palantir. They were wondering if Palantir could really sell their software at scale. It was taking months for customers to get trained up on the software and how to use it. In the last 2 years, they have shifted that completely. They have AIP boot camps that now within a week, customers can get trained up and using the software in a way that is relevant to their business. However, this once tailwind for the company, this article believes is now a headwind moving forward. That's because this profit-driving platform known as Gotham, they believe has a very small addressable market. And that's because this platform can only be used by the US and its immediate allies. And I totally understand where this article is coming from. The Gotham platform has been their main driver when it comes to government and military contracts. And right now, their US government revenue as of the most recent quarter has been growing by 40% year over year. That is massive and that is super helpful because these government contracts tend to be relatively stable. However, as an investor, what most interests me in Palantir is not the government revenue, but the US commercial revenue. I think this is a massive opportunity for the company moving forward, and it's actually growing at a faster pace, 54% in the most recent quarter. It's up from $116 million in Q3 of 2023 to $179 million in Q3 of 2024. And in my opinion, you would be mistaken to say that this has a small addressable market. If you're talking about their Foundry or AIP systems, these markets are absolutely massive. The applications for these types of technologies across the commercial industry, it doesn't matter if you're a Pepsi or let's say an AMD or an ADM, Archer Daniels Midland, these companies all around the world, especially within the US, because they're early adopters often within the US, are easily going to look at Palantir, the data analytics that they offer, and find applications within their businesses for these type of things. Because we already are seeing it in industry. You have companies like Hertz as well as others out there adopting this technology and seeing the benefits of the impacts that they have on their overall business. And this leads to the next point that this article brings up. They are saying that Palantir has a net income of $391 million. However, a large portion of that, actually $142 million, is made up of net interest income. What that means is Palantir has a large cash pile and they're basically making interest income on that cash pile, and that's what's contributing to a lot of the profitability with this company. Precisely 36% of the net income is actually made up from this interest income. In my opinion, this is not a big deal. As Palantir gains more and more money, yes, they are going to make more net interest income. But the thing to me that stands out as being a huge benefit for this company is as they scale up their business, especially their commercial side, they are a software as a service business. What that means is they should be able to capture a larger margin as they begin to scale. And we are even seeing that over the last year. In Q3 of 2023, their margin was 29%. In Q3 of 2024, that has increased to 38%. And what this looks like in practice is, let's say right now, you can go on Palantir's website, they have a deal with Airbus. They have built out software, they have built out AI learning models that capture data from Airbus and drive applications at that company. If Boeing comes to Palantir and says, we want technology like Airbus, it is going to be very easy for Palantir to take that technology and just translate it over. As they scale up the business and bring in more customers, customers, they don't necessarily need to add additional headcount or build out additional softwares. They can basically just translate a lot of the technology and things that they've done for other companies to these new customers. The last point that this article brings up is the one that I think is the hardest to debate, and that is Palantir's valuation. Right now, they're trading at 75 times their trailing 12-month sales. And we're not talking about EPS, we are talking about sales. Here on Yahoo Finance, they have their price to sales ratio sitting at 71, almost 72. However, on a forward PE ratio basis, Palantir is trading at 163.93, and on a trailing PE ratio basis, they are trading at almost 400. And the reason this valuation issue is hard to debate, because right now, analysts in 2025 have Palantir putting up an average EPS of 47 cents. There's a low estimate of 40 cents and a high estimate of 57 cents, but basically people who are buying the stock right now are saying that these analysts are wrong. There are 21 analysts covering the stock, and they are saying that these analysts are incorrect in their estimates, that Palantir is actually going to grow at a faster pace than what people are expecting. There is an argument to be made that analysts have been wrong over the last year when it comes to Palantir's EPS estimate. They have been wrong each and every quarter of the last year, and in the last 2 quarters, they have missed their EPS estimates by around 10%. That means Palantir has beat analyst expectations by 10% each of the last 2 quarters. So that is positive moving forward into next year, and I do think that revenue estimates are actually low for 2025 as well. There are 21 analysts covering the stock, and they have an average revenue estimate of $3.5 billion in 2025, which is about 24% growth year over year. I personally think that Palantir could grow their revenue by 25 to 30%. And if we see that coupled with very strong margin expansion, that could lead to some increased profitability, which could ultimately start justifying this valuation. And the next look that we're going to get into Palantir's business and whether they're executing well or not is on February 3rd. That's when they're expected to announce their Q4 earnings. So for me personally, when I look at my Palantir position, I could see me trimming my position in 2025. At some point, maybe taking it down 50%, maybe even 60 or 70% of what it currently is, just to capitalize on some of the gains. I think that Palantir could have a great next 2 years. However, it reminds me a lot of Tesla over the last 3 to 4 years. In 2021, Tesla spiked up in a massive way and hit all-time highs. However, through the middle of 2024, the stock basically traded sideways and didn't do a whole lot. That's despite the business increasing in a massive way. They continued increasing their top and bottom lines. However, Tesla's stock price basically traded sideways. And I think we could see something similar for Palantir. But remember, don't buy a company or even sell a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. I appreciate all the support you guys have been showing to the channel. If you like the content, make sure to subscribe down below. Help me hit that 4K mark pretty soon here. Again, if we could hit it by the end of the year, that would be absolutely amazing. But I appreciate all the support. Like and subscribe down below and have a wonderful rest of your day. And for the joke of the day, how do mountains stay warm in the winter? Check the comments down below for the answer. Thanks for watching.